Hello, Mark Sturdy here with another extract from 7 Days Ahead's weekly analysis of 7 major world markets. And this week we are faced with rather a dilemma. You'll see that our summary page shows that in no case of currencies, stocks, bonds and commodities is there the three timeframes that we study, are they all in alignment? Giving a good technical signal in all timeframes becomes a good indicator of an interesting situation. I think the reason for that is basically the dollar has weakened sharply over the week, the stocks have jumped sharply over the week, and the bonds have drifted in yields, and with the result that most short-term charts have lack clarity and structure, throwing the possibility of all three timeframes pushing in the same direction into making it rather less likely. There is, however, one market that I think has become interesting, and it is the gold market. We have been, there's no question about it, bearish of gold since it pushed above 1915, suggesting that the inability to push above these two prior highs, there and there, in this third attempt above 1915, the failure to push above those suggests it was going to be another failure to stay above 1915, the big high back in 2010. So we've been bearish long-term. That's been our long-term perspective, our long-term feeling, the context within which we've looked at shorter-term and medium-term price action. And in line with that, we began at one point to see this as a head and shoulders top, a bear head and shoulders top, which completed briefly, pursued a bear move, and then it failed. The market moved back above the neckline, through the neckline. Taking a step back now, we have to reassess both these markets, it seems to me. In particular, we have to take note that there has been a key reversal in the monthly bar chart, a lower low, a higher high, closing on the high last month, and that was on Tuesday. That is important and significant and should be borne in mind, it seems to me, henceforth. That is normally a very bullish signal. Were that to be carried through into price action, it seems to me it suggests certainly a test of these recent highs back here. And if we get a close above, say, 2100, a new surge in bullishness of gold would be on the cards. Is that likely? Well, I think we have the makings of a catalyst to push this on further, which is a parallel channel broken 4 days ago, last week. Some weeks ago. Parallel channel, which could be reinterpreted or seen as a bull flag. The completion of a bull flag, a very good, powerful pattern, suggests a continuation pattern, certainly suggests a move up to the prior high here, 2130, say. Rather higher than these two prior highs here. This would be in itself a catalyst to suggest that this monthly key reversal, bull key reversal, can go further, and that too can challenge those prior highs. So two good bull influences on the market, potentially. What will be the catalyst for further movement? I think we have to wait for the daily chart to push above 2009, close above there, which it hasn't managed. It's gone sideways since, for about a month, since just part 2/3 of the way through October. It's gone sideways. If we can get a close above 2009, that might be the spring, the catalyst for these moves to go further and for a big bull move. Hasn't done it yet, but it's there to be watched very closely. Thanks.